What is Bitcoin DeFi and how does it work? Meta description: Bitcoin DeFi is a term used to describe the blockchain-based, Ethereum-based financial services that are currently available. Read more to learn everything you need about this new industry. Bitcoin has been a long-time favorite among cryptocurrencies. This is partly due to its early success in the cryptocurrency world and partly because it has found new ways of creating money. One of these new ways is Bitcoin DeFi, which stands for Distributed Finance Infrastructure and allows users to create their own fully decentralized lending system. The main idea behind Bitcoin DeFi is to make lending money as easy as sending a message on WhatsApp. So, what is Bitcoin DeFi, and how does it work? To begin with, let's look into the main question that many have when it comes to Bitcoin DeFi: what is Bitcoin DeFi? It's quite simple. Bitcoin DeFi is a term used for a new wave of financial innovation. What is Bitcoin DeFi? Emerging in the world of finance is a new technology known as decentralized finance, DeFi, built on top of encrypted distributed ledgers like those utilized by cryptocurrencies. The Federal Reserve and the Securities and Exchange Commission, SEC, in the United States are responsible for defining the rules that apply to centralized financial institutions such as banks and brokerages. Consumers rely on these institutions to access capital and financial services directly. Individuals are given more authority within DeFi's peer-to-peer digital exchanges, which poses a challenge to the current centralized financial system. DeFi does away with the fees that traditional financial institutions such as banks and other financial corporations charge customers for the use of their services. DeFi allows users to save their money in a safe and encrypted digital wallet, transfer dollars in a matter of minutes, and it is accessible to anybody who has access to the internet. It is worth noting that DeFi was developed by some of the same people who created Bitcoin and all of the other cryptocurrencies. While DeFi is not a cryptocurrency, it provides a different functionality than traditional financial institutions such as banks. DeFi and traditional financial institutions exist in the same ecosystem and play important roles in allowing businesses to flourish. By empowering individuals, merchants, and enterprises to execute financial transactions using developing technology, decentralized finance removes the need for intermediaries in the financial system. DeFi is an abbreviation for decentralized finance, and it refers to the use of peer-to-peer financial networks that utilize improvements in security protocols, connection, software, and hardware. Individuals can lend, trade, and borrow money using software that records and validates financial acts in distributed financial databases. These activities can take place everywhere there is an internet connection. A distributed database may be accessed from multiple locations since it collects and aggregates data from all users and then uses a consensus technique to verify the data. It is no longer necessary to utilize a centralized finance model since decentralized finance makes it possible for everyone, regardless of who they are or where they are, to use banking services anywhere. Through personal wallets and trade services geared specifically at individuals, DeFi applications enable users to exert greater control over their monetary holdings. Bitcoin is one of the most popular cryptocurrencies, and DeFi applications based on Bitcoin's core features are also gaining popularity. One example is the use of smart contracts to make transactions more efficient. Instead of relying on a third party to complete a transaction, smart contracts use digital signatures to ensure that all information relating to the transaction is transferred securely. Smart contracts can also enable people to have their money transferred without any loss or risk at all. Blockchain transactions are digital records created by computers and spread across multiple locations. Smart contracts do what smart keys have done for financial services for physical keys. How does Bitcoin DeFi work? Before understanding how Bitcoin DeFi works, it's necessary to understand that three main types of financial applications drive the DeFi industry today. Each of these three applications has specific features that make it more attractive and useful to users. The first type is known as a stablecoin, which is a cryptocurrency designed to reduce volatility. Stablecoins allow users to trade their money on the blockchain without having their funds exposed to an increase or decrease in value, which is the case with other cryptocurrencies. Stablecoins are an innovation that has resulted from traditional financial institutions entering the blockchain industry. Many traditional financial institutions have been trying to find new ways of creating money. They have discovered that the way they can do this is through the use of stable coins, which are cryptocurrencies that are backed by a collateralized asset such as gold. For example, when you buy a stable coin like USD coin, USDC, you will receive 1 unit of USD coin in exchange for every unit of fiat currency you place as collateral with an issuing bank. Decentralized financial systems utilize the blockchain technology that underpins cryptocurrency. A blockchain can be thought of as a decentralized database or ledger that is encrypted. To manage transactions and keep the blockchain operational, applications referred to as dApps are used. Transactions are first recorded in blocks, where other users can independently check them. If all of these verifiers come to the same conclusion about a transaction, the block will be closed and encrypted, and a new block will be created containing information about the previous block. The blocks are linked together, or chained, through the information in each subsequent block. This is how the blockchain got its name. It is impossible to change a blockchain because the information in earlier blocks can only be altered by affecting the ones after them. This idea, in conjunction with other security mechanisms, gives a blockchain its reputation for being extremely secure. Decentralized applications, dApps, are the third and final application type. These special-purpose applications can be created that utilize blockchain technology to store data. A DeFi wallet is a personal application used to store cryptocurrencies. Most banks worldwide have decided not to use blockchain technologies in their day-to-day activities, but rather opt for more traditional money transfer methods such as SWIFT or interbank transfers. However, issuing these fiat digital currencies is not free because banks must trade with other banks to buy digital money. Financial institutions charge fees as high as 5% on transactions. Banks also charge fees for their services. This is another reason why some people prefer to utilize cryptocurrency platforms. These DeFi applications make it possible for individuals and enterprises without access to traditional financial services to participate in the global economy. Using a technology-driven blockchain environment, DeFi can get beyond the typical management systems and procedures for financial services, sometimes known as the middleman. Oracles, digital wallets, and smart contracts or digital agreements are the tools it utilizes to accomplish this goal. DeFi is a decentralized system that utilizes a financial infrastructure run on various computer networks. These computer networks serve as public ledgers and maintain digital copies of the transactions on the network. The Ethereum network, the second largest cryptocurrency marketplace after Bitcoin, uses cryptocurrencies and digital contracts known as smart contracts. The notion of decentralized finance is revolutionary and is currently being applied to mortgages, loans, and other banking products. This up-and-coming fintech uses decentralized applications, dApps, composed of hardware, software, and stable coins. Because of this, users can lend, borrow, and trade cryptocurrencies without authorization from central banks or government authorities. Coinbase, a corporation based in the United States, used this concept and built a decentralized crypto stock market known as a global digital asset exchange due to the rise in the decentralized finance industry, GDAX. Uses of DeFi. For example, let's say you have a small business and want to raise capital. You can either raise capital in traditional fiat finance or through the cryptocurrency market. The primary benefit of raising funds for your business through the cryptocurrency market is that it is not subject to any regulations imposed by the central bank. Many financial institutions do not allow cryptocurrency usage because they view it as a threat. However, cryptocurrency provides an opportunity for those without access to banking. Common types of DeFi include stablecoins, loans, securities, prediction markets, and lending platforms. Stablecoins are the most popular form of DeFi. They are cryptocurrencies pegged to a particular fiat currency, such as the US dollar, to reassure users of their money's value. Accessibility. The main drawback of stablecoins is that they are more expensive than conventional cryptocurrencies. For example, the USD Tether, USDT, is a stable coin with a 1:1 relation with fiat currency issued by the company Tether, who also issues USD coin. It is made possible through blockchain technology, encryption, and transparency as its security features. Security and transparency. The USD Tether coin can be used to transact without fear because the US dollar secures it. This means that there is no risk of financial institutions freezing funds. USD Tether has a capitalization of $3 billion, and the cryptocurrency responded to an SEC inquiry in December 2017. Autonomy. This is another common DeFi used for options trading and shorting. Autonomous finance is mainly used for cryptocurrencies such as Bitcoin, Ethereum, Litecoin, and Ripple, which are all exchangeable. Shorting. Shorting is selling a stock or other asset the seller does not own and purchasing it later at a lower price. By doing this, the seller generates a profit by selling high and buying low. Low fees and high interest rates. Borrowing and lending require a lot of paperwork and also involve high fees. For example, if you want to borrow funds from the bank, you must complete a mortgage application and credit score evaluation. The costs related to interest rates are excessive as well. Global reach. Most financial institutions in the world have been designed for countries with strong economies, such as the US, the UK, Germany, and Japan. This excludes the majority of people in developing countries. Transparency. Transparency is one of the main benefits of decentralized finance because it allows for greater insight. Every transaction is visible to the public, making it more difficult to scam customers and investors. There are two main reasons why financial institutions use centralized systems. These two reasons often conflict with each other, which is why there is a need for decentralized technology. Many companies also use centralized systems because they are more efficient than decentralized systems, but this is beginning to change with modern technology. As new technology becomes available, traditional financial institutions can implement a decentralized system while maintaining efficiency and security. Advantages of DeFi. Allow individuals to transfer capital. Individuals can transfer capital with the help of DeFi without having to deal with banks and other financial institutions. Lower fees. DeFi allows individuals to exchange cryptocurrencies without government intervention, which ultimately decreases the fees required for cryptocurrency transactions. Investors' ability to generate income. Investors can generate income from cryptocurrency holdings by selling short and using leverage, earning on the currency's rise and fall while retaining the underlying investment. Allow small businesses to get funding. This allows small businesses to get funding without conforming to traditional capital market restrictions. This can be used in countries where the national bank prohibits access to private debt markets. High level of security. DeFi allows for the transfer of financial assets using smart contracts. This technology is more secure and difficult to hack than conventional centralized systems. Transparency of transactions. This is another benefit of using DeFi because all transactions are visible to the public, making it much more difficult for users to scam each other. Each day, a financial institution generates numerous data points about its users, clients, investors, and suppliers. By gaining access to this data, DeFi startups can create financial products that cater to their specific needs. DeFi companies include those who are creating financial products, as well as those who are creating application and product platforms that allow users to interact with each other in real time. These services give users a transparent view of their money, offering more control over their capital without dealing with traditional banks and other institutions such as payment processors. The future of DeFi. The future of DeFi will be to scale and expand services globally. This will happen by giving users the same opportunities traditionally only available to those in developed countries and making it easier for investors to earn more. Using blockchain technology, decentralized finance can provide a global market, enabling all individuals to participate in financial markets and freeing them from centralized institutions such as banks. DeFi companies are expected to make it possible for individuals worldwide to have the same level of financial services. Although plenty of challenges still need to be overcome, decentralized finance can eventually give users the same opportunities as those in first world countries. DeFi and blockchain. Many cryptocurrency transactions happen worldwide daily, with each transaction taking place at a different price. The value of cryptocurrencies is based on how many people are interested in the currency, making it possible for individuals to buy or sell their cryptocurrency holdings whenever they think the price will increase or decrease. If a transaction is not affected by the changing value of other currencies, there is no need for a fixed fee for each transaction. As a result, many DeFi companies are designing their blockchain solutions. This will make it possible for cryptocurrencies to work together with other currencies to create an entire system that will increase their value over time. A blockchain is a decentralized system storing all transactions in an encrypted digital ledger. This decentralized ledger is shared among every user in the system, making it possible for users to verify that all transactions are accurate. The details of each transaction are stored in the blockchain and can be publicly viewed by anyone who wishes to view them. DeFi is a fast-emerging global market that combines cryptocurrencies, blockchain technology, and smart contract platforms. This combination of technologies allows traditional financial institutions and individuals to use their capital to trade cryptocurrencies while maintaining transparency and minimizing operational costs. DeFi does this by allowing anyone to use a decentralized platform without a traditional financial institution, increasing the value of all involved assets and creating an opportunity for investors to earn more. Traditional financial institutions have long been overlooked as they need to be more innovative in their services. This is why there is a need for improvement in centralized systems, which can easily be achieved using blockchain technology and smart contract platforms. The future of DeFi. As more executives become aware of the benefits that blockchain technology offers, they are expected to recognize the potential of DeFi in allowing individuals and businesses to engage in cryptocurrency transactions with a trusted platform. DeFi will only continue to grow in popularity as businesses and financial institutions are willing to embrace decentralized technologies. This will allow individuals who want to increase their capital and investors who want to earn more money through DeFi companies like etherisc.io, Coinbase Commerce, blockport.com, and many others. By leveraging blockchain technology, DeFi companies can have a platform where users interact in real time. This allows individuals to see every detail of their transaction, allowing them to control their capital and have more control over their wealth. A DeFi company helps its users engage in cryptocurrency transactions by providing a decentralized platform that helps users interact with each other while keeping all transactions private. This allows all users to conduct transactions without needing a centralized financial institution. Using blockchain technology, DeFi can create a globally accessible platform where all users can use their financial services to earn more money while maintaining their privacy. DeFi will only continue to grow in popularity as more individuals and businesses can take advantage of the benefits decentralized technologies offer. Using blockchain technology, DeFi companies can create a platform accessible to anyone in any location. This allows users to interact with each other in real time while earning more money without needing a financial institution or central administrator. DeFi will only continue to grow in popularity as more individuals and businesses can take advantage of the benefits decentralized technologies offer. Conclusion. By allowing individuals to use their cryptocurrencies to create globally accessible trading platforms, DeFi will only continue to grow in popularity as more individuals can take advantage of its benefits. DeFi will provide everyone with an opportunity available in first-world countries by giving users the same opportunities that have traditionally only been available to those in developed countries. Although many challenges still need to be overcome, DeFi companies are getting closer to reaching their goals of giving everyone the same opportunity regardless of where they live. DeFi will only continue to grow in popularity using blockchain technology as more individuals and businesses can take advantage of its benefits. DeFi will create a global platform where all users can interact with each other easily and gain more money.